TAQ Capital, technical analysis quickly.
This is not financial advice. I am not a financial advisor. Before taking any action based on the information provided on this channel, it is recommended that you seek the advice of a professional licensed financial advisor.
Let's do this.
All right, welcome back to the channel, everyone. This is a video on Bitcoin and what the heck is going on right now. Okay, firstly, let me zoom out to the daily and give you a more macro view of what's going on. The purple wedge here started when we broke down out of the June 18th wedge. And the June 18th wedge began here and, ran up like this. I've turned off a lot of my wedges so you can actually see what the heck I'm talking about. That was a horrible line. But anyway, when we came down, we broke it. So this became our second hit. And then we shot across, we did our third hit. And now we're working on our fourth hit. Now, this may not be how it plays out. For instance, here's another way it could be. Like this, it could actually already be done where you had 1, 2, 3, and 4. So wedges are really a totality of the circumstances. You got to look at everything to decide what's actually happening. When you zoom in a little bit, which I'll show you in a second here with all the other wedges, you can see that in the short term we're looking at up. However, I want to bring your attention to these green lines here. These are called fib circles. So if I zoom way out, you can see that they make big moves either just before or just after breaking through a ring, or both. See over here, we ran up, broke through the ring, came crashing down. This was pretty lame. Right before, we ran up, hit the ring, ran down the ring, and then broke through. Zooming in a little bit more for you here. As we approached the ring, we hit it, ran down it, broke through. Then we came straight across. Not much happened at all. There was no ring that we broke through. Then we came close to a ring. So red flag right about here. And then we ran right up the ring, broke through it, came crashing down. So then we start to approach over here. We run up and we start to fall down. As soon as we break through it, boom, crashing down. And then it just continued all the way down. Hit the next ring. And then this was our June 18th run. We ran up it. So now we're going to be approaching this other ring, which we will be hitting on, depending on where it hits, November 8th. Would be right around the $9,800 mark. If we hit it straight across, November 26th. So it just depends where we fall in here. So somewhere in November, we're going to hit this ring, and then we're going to see some volatility on the other side of it. Now, if I change it out for a different ring, you have the exact same scenario as far as how the ring's affected. We ran down the ring here. We came up. As soon as we broke through it, we shot straight up, got rejected by the ring, bounced off the ring. As soon as we fell through the ring, continued down some more. We didn't really like run up the ring as in it wasn't right here, but we went in the shape of the ring right there and then petered out, came crashing down, and we ran up the ring on the June 18th run. So then this ring, we're actually going to be approaching more like beginning of next year. So January would be the $10,000 mark. But let's continue. Different ring, but same scenario. Back here, broke through it, came crashing down. Had a little run up to it, went through, continued to go up. This was pretty much just straight across. And then once we broke the ring here, we started to ramp up. And then broke the ring here, started a massive ramp up, got caught by the ring, broke through the ring, and ran right up the ring. Then we came across, and once we hit the ring, massive breakdown, then kind of straightened out across, hit the ring, shot up, ran up inside the ring here, bounced off the ring, came crashing down off the ring there, went through the ring, shot up, but then came crashing down. As soon as we broke the ring here, crashing down. And then this started our June 18th run. So once we had the massive crash down through the ring, started the run. Then we broke through the ring here on August 15th and came crashing down. And now we find ourselves here. So let's look at another ring. And here's the last circle. You broke through it here, and then you started the massive run up. Once you broke here, you stood straight up, hit the ring, rejected, hit the ring, and just sort of bounced in between this channel here, between these two rings. Broke through that ring, straight up, broke through that ring, straight up. Couldn't hang on to it past that ring. and then kind of just bounced back and forth in here, broke below it for a second, broke below it for a second. So we had resistance and support between the rings, and you can see it came up, bounced, and then as soon as we broke through this ring, holy cow, that was just straight up. That was the bull market. But you can see too, even in as you break it down further in here, you can still see that they acted as, support and resistance all the way through. Came up here, shot through, found support there, found support again, crashing through all those rings, found support on a ring, went back up, and so on. So, I mean, the head and shoulders we remember so much, that didn't go unseen in the rings. You've got your support here, broke through the ring, straight up, broke through the ring, straight down, found support on the ring, straight up, down. As soon as it hit that ring, straight down again. And then this was the June 18th run here. And then once we broke out of it, we went up a little bit more, but then we kind of ran down the ring. And this ring will actually hit on March 9th. Oh, well, unless we come straight down, then it'd be more like October. Then when you turn on all the rings, you get this craziness. So what rings are we around right now? None. We're in a bit of downtime here. So we have all this space before we hit another ring. But you can see here too, like we ran down the ring there, we ran up the ring there, bounced off the ring, bounced off the ring, ran up the ring there. As soon as we broke through the ring, came crashing down. I mean, they're absolutely phenomenal previews of what is to come. And next we have Fibonacci channels. And while they're not quite as indicative of big moves like the Fibonacci circles, they are very much predictors of movement, like their counterparts, the circles. And you'll notice that relatively quickly. You can see that we're catching support right here, right now. So, I mean, it keeps wicking through, but the body of the candle keeps getting caught. So here we are on, showing real time the support here. And then, you came down, you hit this one, you came up, you hit that one. You came down, you broke through. So then you've got resistance here. And then we broke up through here and kept going. And if we break this down even further to like the 15-minute, you'll probably see them getting hung up on these. See, this was back and forth between the two. That was resistance. A whole bunch of support there. Support, resistance, support, resistance, and so on. So now I'm going to zoom out to my 4-hour and bring in the wedges. These are the wedges. The yellow one is the June 18th run. Okay, so then we broke down into this purple one here. We've got the 1, 2, 3, 4, and then, we're working our way up. If I zoom in even more and jump to like the 2-hour, you can see that we're in this red wedge right now. Okay, I've got the orange one running parallel with the red one on the bottom because the orange one is technically 1, 2, 3, 4, and now we're working on, well, no, we're not working on breaking up. We actually broke out right here. So we can redraw it now. Actually, instead of redrawing it, I'm just going to look at where we came out of from there. Then we shot up this white wedge, but I actually have to zoom in even more for you to be able to see how that played out. This is the 15-minute chart, and we had 1, 2, 3, 4, and then we kind of wrote it up and then broke down out of it. So in the process, we created the yellow wedge, 1, 2, 3, 4. Oh, there's 4, and then broke down out of it. And then we've got these red lines here are not part of a wedge. These thick ones, these are the Fibonacci lines, which have provided a lot of support and a lot of resistance. And you can see right now, we're caught behind it on the 15-minute chart as resistance now. Because we came up and we hit it, and now we did this giant swing down, almost hit it again, but didn't quite, and are working our way up and out of it. Because it's 1, 2, 3, 4 swing and up, or it's 1, 2, 3, and 4 is breaking straight through. So it's either a 4 or a 5 if you want to count the bounce as a fifth one. So to me, it's just showing that the market is undecided as to where it's going. I mean, all this sideways, like, 2 steps back, 1 step forward, or even 3 steps back, 1 step forward, because we're currently going down, is getting old to me. But that's where we're at, and we're just waiting on this thing to finally break through. But the wedges that are currently drawn, we've got this red wedge that we're waiting to break out of. We've got this teal wedge that we'll be breaking up out of. We've got this green wedge we'll be breaking up out of. We've got this yellow wedge we'll be breaking up out of. It's just one after another. The yellow wedge that we're in right now is twofold. Okay, it's this solid yellow like this, but there's also this dashed yellow. So I use the lower yellow line here as the lower yellow line for both this being a top and this being a top, okay? So if we look at if I get rid of this for a second actually, and we look at just this wedge, we've got 1, 2, 3, 4, and we're working on our way up to go up and out. Because the wedge is down like this, it has to break up, okay? Now if I bring back the dashed one and I get rid of this one is like this, 1, 2, 3, 4, and we're doing the swing down and out. So you can see it in two different ways. So now if I bring the other one back, there's a good chance that the way it'll play out is the 1, 2, 3, 4, and we're working our way up, hit. So this is considered working our way up to this line, but we hit here, we're doing swing down, so then we'll come up and hit that, which could give us another swing down before we break up and out to that. So that's kind of the way that it moves. Right now, it's either moving extremely slowly or extremely quickly. Well, that's the yellow wedge that we are currently in, but all of them are pointing to breaking up. The blue one that I've got drawn here, this one is not an established wedge yet. You can see it's comprised of this hit, this lowest hit here, came up, had a hit here, came down, had a hit here. And now my guess is that we're going to be going up. And where I think we're going to be going based on the Fibonacci retracement tool is here. You draw that up as the first run. We're heading up to the 20,545 range. So right up in this at this point. And then we'll be, well, we could go through it because this isn't an exact science. You know, we may end up, somewhere up here. Maybe we find resistance on this Fibonacci and then start coming back down. Then we'll come back down to the blue here, break down out of it, maybe reset, redraw the line, bring the blue line down a bit, and then we go back up for another hit on the blue line. But that I don't know yet. The purple wedge would indicate that we have to then break out of it. So I tend to think so. So if we break up out of the purple wedge, then we'll keep going. However, if we bounce off of this in the blue and we come back down and we come down even further, this or wherever we end up will be our fourth hit on the purple. Because if I zoom back out on the purple again, we would just drag this down some more. And then our purple wedge looks like this. 1, 2, 3, and wherever that new hit is, 4 before we break up and out. So there's no guarantee. They just give us a guide. So if I zoom into the 30-minute right now, we are breaking back up towards this fib line. We're going to find resistance here. And if we break up above it, say on the next 30-minute one, which starts in, 29 minutes, that's when we'll work our way up to the next one. So it climbs these things like rungs. And they're great for scalp trades. But as of right now, I would say some more sideways, complete and total fuckery. Some volatility as well, because we're kind of swinging all over the place here, which you can plainly see right here. I mean, what is that about? But we're all in the process of going up. So at some point, I would anticipate this breakout. But for now, sit tight, watch it, be careful, use stop losses, and good luck out there. Thanks for watching. If you found this video helpful, like, share, and subscribe. My other socials are down below, and you guys have a great day out there, and I'll see you in the next video.